This is Connie King with the Black America Resource Directory, and we want to say thank you very much for joining us today. And we want to just tell you about an exciting program that we have coming your way. It is called Building a Future of Generational Wealth. And we're hoping over the next 6 months to bring you a series of professional experts who can help us identify some of those areas that can benefit us and help uplift and curate our communities. And tonight is our first episode, and it involves Tatiana Sapp and a young potential prospective home buyer named Mr. Rajan and his significant other, Miss Alexis. And we just want to have some conversation about what are some of the questions and some of the things that you yourself who are interested in purchasing a home for the first time may have.
Thank you so much, Connie. Yes, my name is Tatiana Sapp with the Sapp team. We work with Summit Funding. We are a direct mortgage lender. I have about 10 years of mortgage experience, and we are a father-daughter team. So collectively, there is about 30 years of mortgage experience on our team. I am so excited to be speaking with Rajan and helping answer a few first-time home buyer questions for a lot of you out there who may be preparing to purchase a home, may think you're ready to purchase a home, but just aren't quite sure where to start.
So Rajan, what would be one of the things that you would say that you would need to know it just embarking upon this particular journey?
Well, first and foremost, my name is Rajan King. I have gotten to the point where I've gotten to a career where I'm at least feeling comfortable and stable to get to a point to know how to buy a home and put a down payment and what it looks like, because I work at the U.S. Post Office in San Diego County, and my girlfriend works as a kindergarten teacher. So between both of us, we do have both of a kind of a stable income. It's just in our generation now, we just need some type of, I would say, direction of someone in our generation to show us how to do it. Because out here, either someone's in it or a lot of people don't know how to do it, and we just don't know how to talk to or where to put our money.
Yes, and I will say, as I want to say, we're both millennials. We are accustomed to making money and spending it.
Exactly. And we're living in a world right now to where we live in an apartment complex. Our rent is $2,800 a month just for a one bedroom, just because of California, the city we live in. So it's all about location, where you place yourself, and the whole thing. A lot of people are leaving California and looking around in our complex. It's 40 and over. We're some of the youngest people here, so it's all family. So in this day and age, everyone that we can rely on maybe to ask questions, they don't even know what's going on. They're moving in, right next door to us. So we're trying to look for someone that's actually successful in buying a home, who's willing to give us, the steps and the gems maybe to move forward the right way.
Oh, good. Well, I'm glad, so I would love to answer the questions that you guys have as far as getting started. That's normally how the process starts. So I guess I can give you a quick overview of the process when you decide, you and your girlfriend sit down and say, you know what, I think it's time for us to buy a home. The best place to start is by talking with a loan officer. The reason why is because you want to have your finances in order before you start going out and looking at properties. The pre-approval process is what you would start, which normally only takes about 5 or 6 minutes, believe it or not. But we always start the beginning of that with questions. So let's kind of go over questions that you have before even starting the process.
Okay. Well, one of my first questions is, what steps should we take now to be able to purchase a home in the future?
Okay. So the first steps, I will say, I'll give 3 steps. So the main things that we look at as a loan officer for pre-approval is your credit, your income, and your assets. So when it comes to your credit, I suggest that you take a look at your credit bureau. You can use the consumer bureaus like Credit Karma, Credit Sesame, but there is also annualcreditreport.com, which the government allows for you to pull a tri-merge credit bureau once a year, but due to the pandemic, it was actually allowing for once a week. So pull your credit bureau and just look at the content of your bureau. Make sure that everything on your credit is accurate. Make sure that the balances are showing updated. And honestly, if you're seeing accounts that have fallen behind, or you're seeing accounts that recently went into collections, you may want to kind of get a general idea of what's going on with those accounts before you talk to us, because we are going to ask. The next is income. We need a 2-year history of employment. That does not necessarily have to be consecutive, but if you are self-employed, we do need a 2-year consecutive history of you filing taxes for the business. So those are the first 2 things. The last is your assets for down payment and closing costs. There are several avenues as far as being able to help pay for down payment and closing costs, but one of the main ones is going to be what you have on hand as far as checking, savings, and inside of any retirement or 401k accounts. So it's a good idea to actually look up those accounts, see how much money you have saved, and if you plan on using retirement funds, ask for the terms of actually withdrawing those funds so you can make sure you are able to use them for the purchase of a property.
And Tatiana, may I ask a quick question? Is there normally a percentage that if you're going to use like your 401k, there's usually kind of like a percentage that they will allow you to take out in order for the purchase, and that would be different based on the different company that you work for?
Yes.
Okay.
Yeah. So each retirement plan is different, which is part of why I suggest that you actually talk to them and ask what the withdrawal process is, because they'll normally explain that, how much you actually have access to use. So each company is different. Each retirement plan is different. Some people, depending on how long they've had the account, how much they have vested, they can withdraw all. Some of them they can't. Some of them are a hard withdrawal, meaning you can pull out as much money as possible. Some of them are a loan, where you actually are repaying the amount that you withdraw through your pay stubs. So yeah, each retirement account is slightly different. Normally what you can do is either check online and see if they have a withdrawal process already laid out, or you can call them and ask for what's called the terms of withdrawal, which will spell out the process, and then it should spell out how much you actually have access to use.
Wow. That's a lot to process.
Yeah.
Okay, well, let's go to the next question that I have. I was interested in what funds are needed in order to purchase a home.
Okay. So there's definitely a lot to process when it comes to the mortgage process, which is why you not only want to work with a mortgage professional, but you want to work with a professional that you trust, because my job is to condense all the guidelines that we have and be able to make it so you understand, but also to help you through the process so that it's as streamlined as possible. So when it comes to your down payment and closing costs, a lot of times when people are preparing to buy a house, they think of the down payment, and sometimes they think 20% down, which you don't need, but they don't always realize that there are closing costs involved, which actually pay for the third parties that help with facilitating your home purchase. So what we tell people, the general rule of thumb is to estimate about 3 to 3.5% for your down payment. That's specifically for first-time buyers, or if you're looking to buy a primary residence. And then we say to estimate another 3 to 4% for closing costs. So altogether, estimate about 7% that you'll be paying for your down payment and closing costs.
How much should I save, or what funds should we both have collectively to put in for a down payment for a house? Like, what is like our cushion? What is that amount?
Okay. So when it comes to down payment, it really depends on the program. So when you're a first-time home buyer, you have the opportunity to take advantage of conventional's 3% down payment, or most commonly FHA's 3.5% down payment. Conventional 3% is normally a little bit tougher to get into. It does require slightly higher credit scores. Whereas FHA's government insured program is a little bit easier for first-time home buyers to get into, and it allows for the highest debt to income ratio. So 3.5% normally is kind of the basic point to start. From there on, it really depends on the program. If you're a veteran, you can actually get away with 0% down if you are an eligible veteran. If you were looking to buy a second home or an investment property, the down payments vary based off of that. So normally for down payment, you look to save, aim for that 3.5%. What I like to tell people, especially when you're just starting looking, I know you're looking on Zillow, I know you're looking on Redfin and all those others. So just calculate that 3.5% for down payment, and then calculate 4% for closing costs to be on the safe side, and kind of use that figure as your goal to aim for. Now that's just for down payment closing costs. I honestly suggest that you save maybe another 2% or so for moving expenses. We don't have to take that into consideration, but that is something that you will have to consider for as far as moving, if you want to buy new furniture, those different things. Yeah. What I will also include is, do not get happy when you're in the home buying process. Do not start furniture shopping before your escrow closes, before you have the keys to your home. Any new loans that you take out while you're in the process of purchasing could actually affect your ability to purchase, because it's a new debt that's being added on that we have to include.
Now, Tatiana, is there a listing, or is there I've heard that there's different industries. If you work in certain industries, like you were speaking of with the military, that you don't have to pay certain closing costs. So there's certain programs that if you are in certain industries, for working for the federal or the state or whatever the case may be, is there somewhere where you can go online to look and see if your industry provides those type of discounts or programs?
So the VA loan program is for eligible veterans or active duty members. That is probably the most common, where you get the perks of not having a down payment. Most additional industries, it does take a little bit of research to see if there are programs out there that will assist. It really will depend. Sometimes it's a good thing to ask your HR, because there may be a program within your specific company or your specific employment group that will that they have a program already set up that you're able to take advantage of. But not as much for other industries. It's a little bit tougher than for a veteran, for example, because they have a specific loan program already in place.
All right, thank you.
Now I have a question. What is the pros and cons of entering or like going through a first-time home buyer program, or whatever they can do to get you set up as a first-time home buyer? What are those pros and cons? Because I heard they'll give you a certain kind of like, I just don't know how that works.
Okay. So it sounds like you're talking about down payment assistance programs, which is basically funds that help pay for your down payment closing costs. There are
pros and cons.
There are some pros and cons. So the first thing is that each program has their own guidelines that are separate from the base guidelines of the actual loan programs. A lot of them tend to have, it takes money to get money. So none of these programs are going to just simply be as easy as using a traditional financing option and just simply having your own down payment and closing costs. Oftentimes you can expect they have slightly more strict debt to income ratio requirements. You can expect that their interest rate may be slightly higher. And something that doesn't always get talked about is the fact that they often come with what's called an origination fee. And that fee is a percentage that gets paid back to the company for providing you with those funds. And oftentimes that eats into the amount of down payment assistance that you're actually receiving. And they often can come with income restrictions based off of either the city or the county that you're purchasing in. The other con, I will say, is that depending on the housing market that you're purchasing in, your offer may not be very strong if you're using down payment assistance, which means that you may be taking a longer time to purchase, and you may not get offers accepted because you're using assistance funds that can not be as favorable to a seller.
Yeah.
There's quite a bit of cons, I'm sorry.
No,
But we're
But we can talk about some of the benefits. Some of the benefits are the fact that you are getting funds that otherwise would have taken you a longer time period to actually accumulate yourself.
Yeah.
Oftentimes these programs can be a second loan, but they are considered what's called a silent second loan, which means you are not making monthly payments on this loan. The only time you pay that back is either at the end of your 30 years, if you sell the property, or if you refinance to access cash from your actual property. So it's money that you otherwise wouldn't have had that you actually are able to use to purchase a home, which is definitely a benefit for a lot of people when they don't have the resources to either receive gift funds from a close family member or friend to help them purchase, or they just simply don't have enough time to save the money themselves.
I need to ask one quick question. I thought that teachers in California received a discount of some sort. Is that program still going on?
Not a general discount. There is a program, a GSFA Platinum program that does allow for that does have like a specific segment that is for teachers. But like I said, a lot of them still come with slightly higher interest rates, higher or more restrictive debt to income ratio requirements.
Okay.
A couple of things where you could still get the free money, but it really is going to depend on your specific scenario, how much income you receive,
Okay.
if you fit the guidelines, and honestly, if you're in the right housing market, if the current housing market is going to be able to assist you with actually purchasing a property. I've had some people where they were, well, an example would be a firefighter that I was helping up north in Northern California. He wanted to use that program so that he can get some assistance funds, but he was running into the issue of his offers not being accepted, but also because of the more strict debt to income ratio, he couldn't afford as much home as he wanted. So he ended up ultimately opting to pay for his down payment and closing costs himself instead of taking that program.
When is the best time to buy a home? Or does that vary location, what type of home you're buying, or is it like a general best time to buy a house?
I like that question because we're in the time of media. We're in the time of a lot of TikToks and Instagrams and Facebook posts, and a lot of people are telling you when to buy and when not to buy. My best advice is to buy when you are ready, because if you wait, you will find that you will never own a home and you'll never start gaining that home equity appreciation. So really, I've also had people think that they missed the boat. You know, well, I should have bought in at this time when the market was this and that. Well, the market changes all the time. So the best thing to do is to buy when you're ready. The best time to buy is always going to be now, because we never know what's going to happen in the future. So what I will say, as far as just kind of the cycle of the home buying seasons, is that we tend to see more properties listed in the spring and summertime because people are now out of school, the days are longer, people have more time to actually go out and view homes, and which means that people have more time to list their homes because they're going to go view homes to buy. We normally will see during the fall and winter time the housing market slow down just a little bit, as people have to stay inside a little bit more often, so they don't have as much time to list their property and to have showing scheduled. So it's always now, but just kind of that cycle tends to happen. So if you got pre-approved, for example, at the beginning of the year, and you find that there's not as many properties available to see, you may notice that during springtime that more listings will be available for you to purchase.
Yeah. It's that sense of urgency people trying to get at, to hurry up and get in, buy so the equity can build, but then it's like they don't want to jump in, and then everything just goes downhill.
Yeah. Yes, I have clients who waited to purchase and they still haven't purchased yet, and it's been 3, 4, 5, 6 years now. um, yeah, I think that's the part. When you purchase a property, you may never feel like you were ready to purchase, but I can tell you that it's better to have a property and have the ability to sell it than to not have a property and continue paying someone else's mortgage. Because even in an apartment complex, that's somebody else's mortgage that you're paying.
Mhm.
I told her this is our last apartment that we're going to live in. Next step is a house because we're moving from apartment to apartment to apartment. I'm 28, she's 28. It's about that time.
Yeah.
It's just, we're learning how to just get through what we need to get through right now to pay the bills, but we need to put ourselves in a position to save because we just can't save. So that's another thing. It's like California is not the easiest place to buy a house or to rent for an apartment. So it's like those things come into play. Like we need to be broad for each and every single audience, but California is a little bit different just because it's so expensive. So it's like, how do we get past this?
No, I definitely understand. And right now we are in a time of inflation where, the gas has increased. We don't even want to talk about it. I don't even check. I don't look at the price.
Everyone's on something that moves without 4 wheels.
Yes. A lot more walking, a lot more carpooling is going on right now to save a little bit of money, just a little bit.
The biggest thing is because we're looking from the outside in and not knowing, but we want to know before we get there, what is all the factors and what consists of a mortgage payment?
Oh, yes. Okay. So oftentimes you'll hear loan officer term, we'll call it PITI. So it is your mortgage payment will normally be what's called impounded, which means that your taxes and insurance are paid with your mortgage payment, which I personally suggest. It's required if your down payment is less than 20% down, but honestly, it ensures that your taxes never go into default and it ensures that your home is always insured. So you will often be paying your principal and interest for the property. You will pay your taxes and insurance. And then if your loan requires mortgage insurance, that will also be included in that mortgage payment. So it's a little different than rent. Your rent is kind of just a steady amount and it increases, because they decide it does. I guess I can include a little bit more tips in there. Your taxes, your property taxes, they can change. So your taxes go on a yearly cycle, a fiscal year, and they're billed twice a year. So every single year, there's a new tax bill that comes out and there are adjustments that are made. Oftentimes your taxes are paying for the build of the community around you. So the streets, the street lights, the school district, sewage, all those different things. And those things can change. So sometimes things get added on. If you notice that there's road work that got done, if you notice the new school is being built in the neighborhood, those things do get added to the tax bill and the community ends up paying. And my best advice is when you do purchase a property, check your homeowner's insurance policy that they send out every year, because that does also change as well. And then also check your tax bill every year and compare it to the last one. If you notice that there is an increase in the amounts for each installment, do anticipate that your mortgage company is paying for it, but they're going to do an audit at the end of each year and they're going to set up so either you're going to repay any amount that was overpaid. You're going to repay those amounts in a 12-month increment, or you can just pay that amount up front, any amount that was still basically that they paid for, but you didn't pay for in that monthly payment. Exactly. On the other side, though, is if anything comes lower, every single year, you're going to get a refund of that amount. Your taxes and insurance are your money. So anything that's overpaid, your mortgage company is required to mail that back to you.
Rajan, when you mentioned that you were 28 years of age, I went online and said, what is the average age of a first-time home buyer? And it was 32. So you guys are 4 years ahead of the game. and so will our viewers be. So the average age for a first-time home buyer was age 32, and I thought that that was quite interesting.
I find that our younger generations feel like they need to be ready in order to even start the process. And I would say, as being in this industry as long as I have, is that it's never a wrong time to start the process and receive the correct guidance. Oftentimes people think that doing it themselves is going to get them where they need to be. And then they start the process with me and they find out that they may be headed in the wrong direction for a little too long, and that there's a couple of things that I could have advised them to work on at the beginning of the process. So my best advice for first-time buyers, even if you're not ready just yet, is to get in touch with me, get in touch with the loan officer team that in your state, if you're in a different state. We are actually a company that's licensed in 48 states, so we can help you no matter where you are. But work with a team that you trust, because we can help you not only get pre-approved now if you can, because a lot of people are surprised that they could actually buy now versus waiting. But we could either get you pre-approved, or we can let you know the specific steps that you need to take in order to get pre-approved. So you're not wasting time. You're not trying to put money this way or trying to pay on this one collection account when in fact you don't even need to.
Well, what I'd like to say to the both of you, this information has been a wealth of knowledge, okay? And what I'd like to do is, at this particular time, just let you know that it is a possibility that you can become a homeowner. And please, we're putting a plug in for the Black America Resource Directory. Those of you who haven't subscribe to our newsletter, because Tatiana and the SAP team will be our feature story in our newsletter. And we're hoping, as I indicated, to keep our series going so that we can continue to provide the community with the information. So I know that the information that Tatiana and the questions that Rajan had, hundreds and hundreds of others have those same questions, and they can benefit from the information. So we hope that you reach out to the SAP team and stay tuned, because we're going to do some follow-up questions with Rajan to see exactly in 6 months, Tatiana, where they are in the process. So we hope that you and Alexis would reach out to Tatiana and make an appointment, because this information is most valuable. Thank you to our guests from the Black America Resource Directory. Signing off, Connie King.